Hi guys, and welcome to another market brief with me, Muneeb at Fleetmaxx Solutions. So just going over oil first. So currently oil is trading at the area of $118 a barrel. This is the 4-hour time frame. Oil opened up at 121.68, made a high of $125 a barrel. Got heavily rejected since then and sold off yesterday. We had a bit of a drop, just over 5%. And then today we made a low of 115.66 a barrel, and ever since then we're at trading at 118.2. Yes, we still remain range bound between this massive supply area. This is the 4-hour time frame of 113, where we have rejected a couple of times, and we have bounced off that recently on the 2nd of June. If the path of oil I see, if we do come down, a bounce of 113, I'm back to 118.75, and I see oil remaining range bound for the next week, unless we do break back out above this area and we try to climb back up. So oil is down 5 and just over 4.6% for the week, and is up over 3.64% for the month. Moving over to the pound dollar exchange rate. This is the daily chart. As you can see, pound has been heavily sold off since the start of the month. We were trading at 126.39, and then just on Tuesday we hit the low of 119.35. This has been a multi-year low. We have not been this low ever since 2020. The last time we were this low was the COVID crash, the pandemic, and we dropped down to 114.25. The reason is the dollar is strengthening, and the Federal Reserve yesterday raised rates by 0.75%. That's a 75 basis point. This is a big rate hike. We have not seen a rate hike of this magnitude since 26 years. The reason is inflation is at a 40 years high and is currently at 8.5%, and the mandate for the central bank is 2%. So yesterday, Jerome Powell, the chairman of the Federal Reserve, did mention that they are going after inflation with much bigger rate hikes. So expectation is much higher rates for this year and the next. So again, the Bank of England had a rate hike. They had a meeting this week, and they had a rate hike of 0.25%. On the initial announcement, the pound did drop a little. We dropped just over 1%, but then we recovered quite aggressively because Andrew Bailey, the governor of the Central Bank of England, did mention inflation is currently at 9% for last month's reading, and therefore they will be following suit and sort of aggressively raising rates to curb inflation. So currently the pound against the dollar is at 123. We can make headway back to 130 if the Bank of England does deliver back to 130, depending if they do raise rates more aggressively on 50 basis points. And that's pretty much it. Apart from that, oil remains range bound between these two major zones. Look at the daily time frame. Price action, we have rejected off of 125, and the last 3 days we have sold off. Again, I don't see any reason why we'd be dropping down. There's no sort of major catalyst whatsoever. Output hasn't increased a lot from OPEC either. So again, we see oil range bound. And that's pretty much it, really. That's your market brief. So join me again next week. Thanks.